Mid-April, here we are. Good Friday. Happy Easter. Happy Good Friday. But hey, I want to go over kind of this market right now that we're running into and what we should do about it. Um, I believe that you're going to want to take advantage of this wholesale market to make sure your inventory is clean going over the next couple of months. This is a little repetitive, but I want to mention a couple things. Like I remember somebody telling me that, you know, that I do a lot of negative stuff, like sky's falling stuff. And all I'm doing when I do these videos is give you insight and prepare to keep your inventory moving, keep it lean and clean. I think you always want to be able to keep your inventory clean, no age, just so you can always be a buyer at current market conditions and that you have the flexibility to try things out. So if you want to try keeping your prices high right now because wholesale's high, well, you could do that if you're clean and disciplined, because then you can make adjustments if that plan didn't work and you're not stuck with a bunch of stuff. The other thing is, I did a demo earlier with a dealer that, is afraid to sell too fast because they weren't able to feed the beast and keep that inventory level as high as it is. Because if they sell too fast, it's hard for them to acquire. Then, all of a sudden they're out of inventory. So, I might jokingly said to him, so is the goal just to let the car sit, not meaning to be, ignorant or mean to him on that, but it was, what's your alternative? And because we are noticing that I think 60% of his sales are going out after 45 days, and all those deals were losing money, 45 to 60 was losing a couple $100, and 60 plus, where 50% of his sales were going out on average, markup was losing $2,000. So again, a lot of dealers, they're not struggling with gross because they're cheap, sold a bunch of fresh cars. We're struggling with gross because we have too many cars, half our deals going out losing money. You got to stop doing that. So increase your fresh sale rate. And so in today's market, with wholesale being up, and one of the reasons wholesale up is there's less cars running through the lane. Dealers are keeping their inventory. Any trade-ins and stuff, they're holding on to them. Again, because of these tariffs, they're afraid of the shortage of not only just new cars, there's plenty of new cars out there, but over time, if the shipments aren't coming or they're going to be more expensive, people don't want to buy new cars, they're going to transition to used, is what everybody's believing could happen. And so as wholesale is going up, due to the fact, two reasons: we had a strong tax season. Everybody was having high volume record months. And in February and March, I was seeing everybody post about the record month, record year over year. And now all of a sudden, I'm not seeing those posts as much. And, because again, we're rolling into this slower spring season. So wholesale goes up as dealers are replacing vehicles from that volume. Okay. And then they're willing to pay up just to replace that inventory. And then what traditionally happens, wholesale starts dropping off a little bit by now and going forward for a bit. The problem is right now it's going up again because of the tariffs. Dealers are holding on cars. There's like 60% less cars running through the lane. And so there's scarcity of cars. And so whatever cars get sold are going to be worth more at the lane. So dealers feel like they have to buy to keep their inventory levels up or at a certain level. Problem is customers don't have to buy, okay, unless there's a need. Totaled their car, 16-year-old needs a car, wife went back to work, or spouse went back to work, we need another vehicle. Unless they need it, they don't have to buy it. And a lot of customers are negative equity or lower interest rate than what they can get into right now. And or obviously the payments are lower. So they're in these cars that are a little bit tighter to go up and upgrade. So it'd be a little bit tighter on the budget. So insurance is up for everybody, right? So insurance cost is up, interest rates are higher, and negative equity. And if anybody's going to do anything, they'll probably go toward one of these great new car offers like Ford, Chrysler, Dodge, Jeep's offering. So with that, I was going to go over some trending metrics. Again, I've done this before. I did this last week and went over how we were noticing retail prices dropping. As wholesale goes up and it costs us more to acquire cars, when we flip around to sell it, a lot of dealers take that cost that they're paid and jack it up their $2,000 or $3,000 or $4,000 to try to make their profit margins, cost up pricing. And that's causing a lot of slowdown. So we're seeing a lot of dealers actually making drops in retail prices. So even though the average used car in the market's higher because it costs more, what's going on is one of the reasons why the average used car is higher is the cheaper stuff's selling and leaving, and this higher dollar stuff is out there sitting and getting older. Okay, so average price of used cars going up isn't necessarily an indication that they're worth more. It's what's out there available for sale that's going up. One of the matter of fact, one of the headlines that I was looking at was through Black Book. Black Book, and I shared this on. If you don't follow me on Facebook, please do. But one of the things that Black Book shared, and let me pop up this and share my screen. Let's go right here, share it. Is in their post here, right here. They're talking about last week showcased the strong performance in the wholesale market, achieving a significant milestone for the year. First time, nearly all segments saw positive increase. Okay. An update on 2 ongoing trends: Canada vehicle exports to the U.S. The number of previous Canadian vehicles appearing in auction has dropped nearly by half of what they observed just 30 days ago. And prices for these vehicles continue to rise as inventory declines. That's what we're just talking about. But additionally, there's a substantial volume of vehicles are still being offered for sale by OEM lanes. Okay. Last week's auction conversion was 65%. So auction conversion's up. We trend that here. And matter of fact, that's even here, 65%. Okay. Last week's auction conversion is trending up. Well, why is that? Well, because we just got off of a high retail volume. We're replacing those vehicles. With that, the average retail days to turn has dropped, again, because we had higher volume. But here's the other thing: use retail listings. Okay, I just did a post yesterday, and I said yesterday or Wednesday, and I said, hey, I'm going to do a video about this. We see retail listings are the same or up than from previous years. So one of the things we track in here in our Lotwalk software is listings on AutoTrader and Cars.com. We look at that each week. And if we go back to April 22nd last year, 1.4 and 1.1 million used cars listed on AutoTrader and Cars.com. And now it's 1.4 and 1.1. But actually, there's 30,000 more cars on Cars.com and AutoTrader. See this 1.435, 1.160 is now 1.460 and 1.90. So 30,000 more used cars out there in the market. But one of the things we did share too, and again, it fluctuates, but up and down. But, this time last year, shopper index 88, 90 out of 100 for Google. And then if you compare that now, it's down to 85. Matter of fact, I want to pull that up too, because if you go 12 months, again, currently this is always changing. Again, within the last week, it was at 88 and 90 last year. Well, right now it's at 85. So we're talking 5%. Yesterday it was 5% less shoppers looking at more cars. Okay. But if you look at the peak, March 2nd was the peak of this shopper activity. So, March 2nd, just 45 days ago, was the peak of shopper index, and now it's at 85. That's a 15% drop since March. Well, over the last 30 or 45 days, and we're going to go into this number here, as dealers' volume increased, see, March 10th, our dealers were selling 55% of their inventory in 2 weeks, or 110% of their inventory a month. That peak happened the same time the active shoppers were happening, right? March 2nd. Now, March 10th, here we are, it hit the peak. And then the market shopper count dropped 15%. Well, what's happened? So that if they're selling 55% in 2 weeks, this means they're selling 110% in a month. What's happening now? Well, we're down to 45. Okay. So our dealers now are selling 90% of their inventory on average. Okay. Now, if that sounds good to you, that's our average dealer. So if you'd like to sign up with our help, let us know. Hundreds of dealers all over the country selling 90% of their inventory. But why? Well, because they dropped 15% because the shopper index dropped 15%. There's less people looking for cars, and there are more cars available. That's what we've tracked, but you can go to Black Book, used car retail listing volume. It's up. And if you compare that to 2024, it's getting that same level. Okay. So how does this all match up? And matter of fact, retail listings weekly price, again, a little bit higher dollar stuff. Well, why? Again, I don't think, yes, higher values are going up at the lane, but also there's less cheaper cars going through, especially when I pointed out that Black Book said there's a substantially amount of OEM cars out there. Those are going to be higher dollar late model cars, but no one wants those because now you're competing against new car deals. Like, who wants a 2024 Ford Explorer, late model, low mileage car when they could buy a new one at employee price and minus rebates? Okay. So wholesale pricing again is up, but it's matching 2024 also. And what happened after 18th, 19th week of the month, it starts going back down, as do the shopper index and everything else. So my point being to all this, because I've posted some things and I'm going to stop sharing my screen. I posted something on social media. What do you, wow, you found the magic pill, seasonal adjustment, like it always happens, is pushback and stuff. I wasn't trying to say that. What I'm saying, it's a different market. We always know this tax season seasonal adjustment's happening. If you don't stay ahead of it, you should. But the difference is these tariffs. What's going to happen? Okay, now it's not going to happen for another few months. Meaning, even if these tariffs stick or don't stick, if they don't stick, we're in a worse problem. If it does stick, people are going to rush out and buy these new cars before the other tariff cars are hitting the lots. So it's going to stick, but I'm talking about the bigger ones and other markets. We don't work those deals out. So in other car segments. So my point being in this, should you use today's wholesale market clean up aged inventory? Well, I tell you what, I know for sure that the shopper index continues to fall through May and a little bit through June. And then we get a little bit of uptick in July and August. But for the next 60 plus days, the retail shopper index drops. And I think it'll be even worse with these tariff stuff and high interest rate and insecurity of where the economy is going right now until this stuff's locked down. Customer confidence and sentiment, because again, they don't need to buy anything. They're going to repair their cars. They're probably rushing out to repair their cars and get the parts they need before those get hit with tariffs in a few months. They've been delaying getting brakes and tires and things like that. They might be doing it now before the tariffs hit. I know there's a May, I think, is when the parts stuff start hitting. So you could use, now I'm all for, to cap this off, I'm all for burning ships at the harbor. Once I commit to a retail exit strategy, I'm going to retail a car because I get the benefit. Even if I lose $1,000 retailing the car, hopefully I get a trade in F&I. So should you use these wholesale markets? Because again, the guy I talked to earlier, he was wholesaling a lot of cars because what they were getting offered on wholesale was higher than the retail price they would put in it at. So his fear of being short on inventory is him selling out cars to the wholesale market. Well, you should do that with your age cars. But here's what I would be cautious with on the age cars. If it's a one-off car, probably wholesale it. And what I mean by one-off, really low-mile car that's a one-off that people drive and travel for, cheap car. Somebody might come 2-3 hours for that car. Well, then you're not getting F&I, you're not getting service, you're not getting a trade-in probably. What I mean by that, if it's a cheap car, it's probably cash deal. Trade-ins aren't worth the crap. Or if they're driving 3 hours, they probably already got the trade-in figured out, so they don't waste time there. And they probably got a lot of their financing figured out too. And then, of course, they're not coming back for financing. But if it's a run-of-the-mill car that, let's just say Nissan Altima, okay, somebody's not driving 3 or 4 hours for an Altima. If it's a 2022, you might get that 15, 13, 14, 15 trade-in that you can't get at the lane if it's decent. And if it's a 2022, 23, it's probably higher enough of the clients, one of those clients that are going to probably finance with you and maybe at a little higher rate, right? So you get a customer that's going to probably finance with you that might get a trade, but at least come back to service if they're local, as long as you do good service walk and stuff. So be strategic of what you use, but you might want to clean up this inventory. Let dealers overpay for your stuff that won't sell. Replace it with some fresh stuff that you know can sell. Historical data will help you with that. Or I like what we do in our tool is we look at the cars that got lead activity that you sold. Let's buy another one of those and circle back to those leads. You got a certain F-150 that sold, you had 8 leads on it and it sold in 20 days at 98% of market, but you had 8 leads. Well, once that car sells, you got 7 leads left. Go buy another one of those and follow up. So go ahead and buy to an active audience. You don't have to search for it. And again, today's market, it's going to be hard to search for customers. You're going to have to step up and really stand out. So that's what I wanted to go over. Again, these markets are going to be shifting. It's going to be soft. Get that inventory cleaned up. If you got to wholesale some of these aged cars, probably better off doing it. If it's some Jaguar or something, whatever, that's not good for your store and probably won't get serviced, things like that, your Ford store somewhere in a small town, it's a Jaguar. Best end user, as Brian Kramer says, are you the best end user on that aged car? Is that why it aged? But you can wholesale it for more. Go ahead and take advantage of that market. Clean up your inventory. So if in May and June this continues to be soft, you get to experiment and be able to have some fun, like I said at the beginning. For more help and insight on your inventory, last demo I did, we pulled up his inventory management tool. I was showing him what to be looking at with or without our services. So I'm willing to help and keep you ahead of this market. That's why I do these tips. Bless the industry that's blessed me and my family. So hope this was helpful. See you next time. Have a great holiday weekend. Happy Easter, and